Good afternoon. It is December the 13th. Time to wrap up our trading for the day with our PM commentary. The CFTC requires us to have a disclaimer on our research these days. So just remember, hypothetical or simulated performance results, which we don't post, have certain limitations. The past does not guarantee the future. Trading futures carries a lot of risk. Leverage can work for you, can work against you. So you have to know what you're doing when you do this. Okay, we came in on the E-mini today, liking it alongside. We thought it would trade higher. We thought we were in position for another record close. We would hope to buy the 50 to 52 area. We quickly moved it up to the 55 area, 57. Then it took 60s to get in. So support was 55 to 60, and we had resistance starting at 65 to 70. We did get up to 73. The best trade of the day came right there on that retest failure with the monkey trade. All of these trades produced 3 points to scratches. There was not a trade off that S. We liked the long side of the market, and that was the trade that we liked right there. Went all the way up till we got to 73. They got stops, every stop you could get above 22.70, and it looks like right now we'll close at 67.68, somewhere in this area. So pretty good trading. We had the idea right. We had the direction right. That doesn't mean the market can't sell. We did sell from 22.68 all the way down to 22.60, but the idea is to find a place to get long and then try to ride it as long as you can. This is higher low, higher high. F1 screen says find a place to buy it. When we look at the F2 screen, you can see that it's a B and volume is above time, so everything says find a place to buy it. Similar situation to our 22.65, 67, self failure to take out and hold 22.73, 22.70. That's self failure. We really like the long side of the market better. The tendency for the market is to rally into the FOMC announcement. I think it's going to do that and do so tomorrow. Second sell will be 74 to 79, necessarily wide. On the buy side, last rotate stopped at 65, then down at 63, so 63, 64, 66 by 1, and then 60, 62 by 2. Lots of news tomorrow. PPI up 0.2, core PPI up 0.2, retail sales up 0.4, ex-autos up 0.4. Industrial production minus 0.2. That's the only negative number that we have. Capacity utilization 75. Nobody pays any attention to it. Business inventories unchanged. And crude inventories, we'll get a pretty good read on where those are going to be tonight with the API numbers. The focus is retail sales, ex-autos. We will get some play out of the PPI numbers too. If inflation comes in higher than forecast, then that makes more interest rate increases in 2017 likely, as opposed to fewer. Right now, everybody's pretty much expecting the interest rate increase. It's built in. The issue is it 25 basis points or 50? I don't think it really matters. I think the market's going to rally. I think we see new contract highs on December the 31st. Markets always go higher or lower than forecast, and where logic and fundamentals say they should go, and the rallies always last longer without a major piece of news. Okay, the 30-year auction was a good one, but overall the auction this week by the Treasury is pretty weak. Tough to move paper in front of an FOMC announcement, but move it they do. Higher low, higher high. Can find a place to buy it based on the F1 screen. And I do this the same way every day, and it is that simple. Higher lows, higher highs, favors the long side. Lower highs, lower lows favors the short side of the market. We have a P with today's distribution. I'm guessing pretty quiet tomorrow, pretty quiet overnight as they wait the pronouncement by the Fed. So 3 to 7, sell 1. 11 to 15, sell 2. Put a question mark at 124. That could be resistance. On the buy side, 25, 29, pretty much where we were this morning. 17 to 21, buy 2. Now, on treasuries, because they've been sold into the announcement, my guess is we could have a relief rally. Now, the Fed's raised it 25 basis points. Just cover these shorts. The news isn't going to change anytime. It's time to book profits. So I think that's a possibility, too. Okay, looking at the 30-year, whereas the 10-year was a little bit lower. The 30-year held in there pretty good. The knob spread didn't contract all that much. We caught this morning. We had a sell 19 to 23, and we had a buy 25 to 21, and that 25 to 29 worked pretty good the first time into it with a low of 23, but we made lows later on in the afternoon. Our second buy was this morning was 17 to 21, and you can see we have the low at 17. So we knew where to be buyers today. Last rotate up was 49.02, so 49 even 04 is number one. Sell 7 to 11, and then 19 to 23. Have some support down here at 20 to 24, this area right here. That's number one. 13 to 17 is buy 1. And then 1 to 5 will be buy 2. Gold is pointed lower, just like treasuries. No reason to own gold. Interest rates are going up. You can get paid money on your money, and stock market's going higher. No reason for protection there, right? Anyway, that's the logic. So we have an inside day here. I think we'll probably be a little quieter tomorrow as the FOMC announces increased interest rates is negative for gold over time. Definitely dealing with a B here. So 64, 66, sell 1. 69, 71, sell 2. On the buy side, where we were this morning, 55, 57 was buy 2. Make it buy 1. And 50, 52, buy 2. Okay, crude. We have the APIs tonight. They would like to see draws in crude naturally. Inside day today. Still have this gap down here to fill. My guess is it will be filled. News will drive this market. Signs of cheating or non-cooperation will take us down for a bit. But remember, on paper, they've got a deal. So I don't expect the bottom will fall out of the market. So I'm going to guess, $50 minus, $60 plus market as it stands right now. Dennis Garten of Zero Hedge Fame says not going to get above 55. We'll see who's right. 53 and a quarter, sell 1. 53.50, 53.75, sell 2. 52 and a quarter, 52.50, buy 1. 51.75 will play to fill the gap down there. 51.50 for buy 2. And the market's usually pretty quiet until the EIA numbers release, then all hell breaks loose. So we have a chance to buy down there against filling the gap. Euro's in a fairly tight trading range, 106.50 plus, 105.50 minus. Higher interest rate here should hurt the euro tomorrow. Obviously, it's built in. Higher low, higher high, but again, we're having a hard time holding 106.50, so in anticipation of an interest rate increase tomorrow, like to be short the euro. A B. Last rotate up stopped at 40, so we'll make 45.55, sell 1. 70 to 80, sell 2. On the buy side, 106 even, 106.10, buy 1. 105.75, buy 2. And that's it for this December the 13th, 2016, the day we've been awaiting since September, when the Fed said December was going to be it, when they didn't raise interest rates, and September has come. We'll see how much the Fed raises interest rates tomorrow. See you bright and early in the morning. I'm out of here.